In today's economy, more people than ever are looking to buy and sell businesses. But how do you do it? Welcome to the Deal Board, presented by Transworld Business Advisors. Straight talk about real deals and real people. Listen to stories, interviews, and expert advice to help your business sale, merger, or acquisition process. Now, here are your business exit experts, Andy and JT.
Welcome to the Deal Board Podcast. I'm your host, JT Jim Tatum, with my co-host,
Andy Cagnetta.
And Andy, today we are talking, for those of you who have interest in...
Interest rates.
Interest rates, that's right.
Where were we talking before? And we had a whole podcast apparently.
On what we were going to talk about interest rates. So, yeah, how to keep, or what we'd like to see happening to keep interest rates reasonable for the sake of Main Street.
Yeah, I think what I wanted to bring out in an article that I wrote recently and in this podcast was that, you know, the Fed and our legislators and the Fed specifically think they have a tool that can help regulate the economy. And I think, you know, it's almost like flying a plane with the stick. You can't push it too fast, otherwise the wings.
The ground is rapidly approaching.
Right.
Yes.
So you know, but our big plea is talking about, like, we're going to talk a little bit of some macro stuff and some micro stuff at the same time. But, you know, talking about interest rates that they shouldn't be too low and they shouldn't be too high.
No, that's true. I like your analogy of the joystick, because if you're going too low too fast, the ground is rapidly approaching. If you go up too high too fast, you stall.
Right.
And we've seen deals stall because of exactly that point right there. So
yeah, so we could give it a little history that, you know, we were in the doldrums of the 2008, 2009 economic crash, where the banks were upside down. They didn't have any lending power. It was too big to fail. You know, all this stuff happened. So what did the Fed do to try to save the world? They brought interest rates down to
almost zero.
Yes. I mean, basically
that's
zero.
Right. And that went from 2008 to 2015.
Yes.
That's a long time. Think about that. I was going through the 1954 till 2024. I said, show me the last 50 years. What's the interest rate has been? Any idea, if you want to guess?
No. 5? I don't know.
4.6. That's a pretty good guess. That's a pretty good guess, yes. But there were times when it was in the 80s, it was as high as 19%. Yes. And then we had these times in 2008 through 2015. It happened again at COVID, where we were down just above 0.01, fill in the blank.
Right. So when the interest rates get that low, of course, it's good for some businesses because debt is very cheap.
Sure. Money's cheap.
And people are borrowing money, which could devalue, you know, bring inflation up because people have too much money. They're spending it too quickly.
Right.
And what we saw during those times was really good SBA loans. You know,
more buyers coming into the market because they can get the money to make the acquisition. But what was it doing on the seller side?
That's the problem. On the sell side, what we're seeing is we talked to many baby boomers during that time, and they literally looked at us and said, you know, and this, again, in the context of 2008, where the stock market is at 14,000, the Dow Jones Industrial goes down to 7.
Right.
So literally half their 401ks are wiped out.
That's right.
Right. So now they've lost faith in the stock market. So now they're going to say, hey, if I get $1 million from my small business or $2 million from my small business, and the banks are paying me 1%.
Right. Why would I do that?
What am I going to do with my money?
Yeah. Because, you know, it's interesting. You look at the interest rates, what that's been for the last 50 years, again, 4.6, right? And what's the stock market been in the last 30 to 50 years? What's that? You know, people are looking at 6, 8, sometimes 10. Right. So when you compare that, you go, okay, get this money, put it in the market, and I get an 8% return. Yeah, I'll do that. I'm going to get a 1% return. I'll stay where I am.
Right. So a lot of people held on to their businesses, and it was very difficult to, you know, and that's hurts buyers too. I mean, you know, we see that in the housing market too, right? So we could talk about that later, because now that interest rates are high, people aren't trading their houses, and so we lived through that right through inflationary times.
Yeah.
And now inflation starts getting out of control. and they decide we're going to raise interest rates. And not only do they raise the interest rates, they do it quickly.
Right. Too quickly.
Yeah.
And they do it once and then they do it again.
Right. They were doing it every quarter.
Right. And then they don't know when does it end? When's it going to end? And what's the impact that that's going to have? That's doing this again. Your joystick pulling back, going up, and then there's going to be a stall.
And there were stalls.
Yes, exactly.
And what happened in the M&A world, what we saw in 2023, was that people who were doing deals couldn't predict what the cost of capital would finally be.
Right.
And what happens is people won't do deals because they can't cost out the jobs. And what I've seen in the commercial real estate market where people are building, they're not even taking on the projects because they don't know how much they're going to be, how much the cost of capital is going to be.
It's interesting. The church I attend, we're going through a big capital raise campaign,
right,
because we're going to build a new extension to the facilities. And originally there was, let's say it was $3 million we needed to raise. Well, it took us 2 years to raise it.
Yeah.
Then they got the adjusted quote, which is now almost 6.
Oh my God.
So we're almost there, and then you're not quite
that's
there.
Inflationary times.
That's right.
And then on top of it, if you're going to borrow that money, you're going to have a construction loan, maybe against some pledges that you have over time.
Right.
You're going to be paying, I don't know, 7, 8, 9% on that loan, which is, not so, it chews into a lot of principal.
Right.
And what we saw during that time was M&A deals hesitating. People, since it was going up so quickly, people hesitating selling their businesses because they're worried about the prices. And then buyers, perhaps not doing SBA loans. We saw some sellers take the debt on themselves.
And just do seller finance.
Yeah, because now all of a sudden, SBA loans are at 10%.
Right.
And they're like, oh, wait a second.
I'll be the bank.
I'll be the bank.
Oh, exactly. That's exactly what happened in one of the deals we were working on. It was a small retail business, and we brought the buyer to the seller and said, here's the deal. They're going through the SBA, 20% down. It was an $800,000 purchase. And she said to me, well, how much is the bank getting? And at that time, it was 10.5%. She said, well, I don't need the money. Like I'm set up right now. I'll be the bank.
Right.
Have them give me 30%, and I'll finance the 70% at basically 10%. And over the course of that 10-year period, she's going to make like an extra $200,000 in interest. She was happy to become the bank at that point.
Yeah, because again, now the sellers, a lot of sellers are thinking about selling their business. They can go out to the marketplace and find a place for that money. Maybe it's not in the seller note, but maybe it's in a bond that's at reasonable rates,
that's
6%, 5%, maybe some corporate debt that's quote unquote safer. But, treasuries, what are at 3 or 4%, but at least it's not 0.
That's right. Yeah, that's right.
It's not 0 anymore.
Yeah, that's the thing that people hesitate on when they can't take the money and put it somewhere that they know they're going to get a good return on.
Yeah, so our big plea to the world of interest rate makers is
that's the Fed.
Yeah.
Okay, I'll say it.
Okay.
It's the Fed.
Well, it's okay. I have friends that are on the Fed, and I have this conversation with them. The nice thing is, by the way, is that the Federal Reserve has started calling businesses.
Well, and I think that's an important piece because they typically don't look at the business. They're looking at the consumer and what it means for the American household, which they should be looking at that too. But they're forgetting that the Main Street business is what fuels a lot of those American households.
Right. So I've had calls with the Fed. They ask me questions like, what would you think if the rate went down? What would you think if the rate stayed the same? What do you think if the rate didn't go down? And I'm, like this year in the year 2025, we expected rates to go down. Probably not as much as they did.
They have, right.
So
and continuing still, right? We could be looking into the early part of 26.
Well, I would think, if they called me today and said, what do you think about the rate not going down at the beginning of 26? I would say that would be not liked. It would be unfavorable to the business community. They're expecting it to go down again.
It's interesting, huh? So now the expectation is there.
The expectation actually drives some of their decision making because Wall Street anticipates it.
Right.
So if all of a sudden it doesn't happen when Wall Street and the money and people are investing, they say, "Whoa, wait a second.
Yeah,
they're doing something that we didn't expect."
Right.
It's really strange, and it does. it affects so many things, from like credit card debt to car loans. And you're thinking about all these small businesses that use these types of instruments, whether it be leases on trucks, whether it be leases on new equipment, and that affects manufacturing of trucks and new equipment and restaurant equipment. And,
But it also will stall the business owner who's not ready to sell. He's thinking about making a capital expenditure. He's going to upgrade his equipment. He's going to get a new space. He's going to buy a building. He's going to add vehicles, in preparation for what's coming down the road, and he's going to pause there for a second. And you don't want that to happen. You want that to continue to fuel them in their growth going forward, which again is bringing jobs. There's two pieces, right? There's the businesses existing right now. It's already providing for the owner and their employees and their families. It's securing the community. And then when it sells, that same thing happens again. And so you don't want to stall it on either front, not for the guy who's already in business currently or for the one who's preparing to sell going into the future.
It was funny when the interest rate was at its highest, which was probably at the beginning of 2025 or end of 2024, I forget when it was, but when it was at its highest, we heard some M&A folks, some seasoned M&A acquirers, private equity groups, people who are borrowing money saying, "Oh, that's the interest for the acquisition," because they expected in 2 or 3 years that they would be able to refinance. So they're even building that into the models. Again, if interest rates don't come down and they had built something like that into their model, the businesses might fail.
But it's good because, if the interest rate, I had this conversation with my daughter and she was talking about, this was 2 years ago, coming out of COVID, and rates were now at, like we said, 0, and then they were 1% and 2%, and then it was going to go to 6%. And she was like, "Oh my gosh, Dad, the rates are so high." And I said, "Lacey, look at the interest rate over the last 50 years. I remember when I bought my first car, it was 16%. And she went, "What?" And I said, "Yeah." So it's all a matter of what's your point of reference? Where's your context? Where are you coming from?
I bought my pasta shop in Hartford, Connecticut, and we borrowed money from 3 family members, $15,000 apiece. It was $45,000 acquisition cost. And each family member, I wrote a promissory note for 12%.
And what year was this?
1990. Or so. 1990. So, So about 6 months later, no, it was a little more. It was about 7 or 8 months later, I called the family and said, "I will be paying you interest only for the next few months." Because one of the things I didn't realize how seasonal the business was. And that's another thing about interest rates being too high. It certainly puts Main Street at more risk. So, we were very, I was upside down at the time, trying to find ways to pay bills. So I paid them interest only. I wound up selling the business. I sold it for more money than we bought it for.
Good.
So I got to pay everybody back. And it was a great lesson in macro and microeconomics. But, for me, I think, an SBA loan is risk capital. And the nice thing about the government that is guaranteeing the loan, it has given, because we work with business brokers from around the world, Transworld, and the SBA program is a great program, and it has given capital to deals that probably wouldn't normally have gotten capital. So I think, in my heart of hearts, I would love to see the interest rates for the United States government to stick around, 3, 4, 5, and SBA loans, hovering certainly in the single digits, maybe around 7% or something.
Because you're normally looking at 2.5 points on top of whatever prime is, right? So that's the deal.
So because when SBA loans get above 10% and above 12%, people are not going to be able to borrow, and the deals aren't going to pencil, and people aren't going to retire. And it just kind of
so let's go down that path for a second. Because when you say that, like, we're using lingo now that the average guy might not. When you say the deal's not going to pencil, explain what that means.
Well, at some point, the business makes, let's say, $250,000, right? And they're borrowing, $500,000 to buy the business.
Okay.
Say
over 10 years.
Over 10 years.
So they get a $50,000 plus interest payment a year.
Right.
$4,000 a month.
Right.
And the business you said was making 200.
Right.
Okay.
So it's $50,000 in payments.
Correct.
A year.
Yes.
60,000 with interest, maybe.
Yes.
So what happens is if the interest rates get too high and they're paying, $100,000 a year in payments, and something happens in the world where the business goes from making 200 to making 100, and their lifestyle or whatever in their house, they have cars, they have kids, they have houses. They need
to cover those.
They need
expenses.
to cover $100,000 for themselves.
Right.
The $100,000, is chewed up by debt in the business.
There's not enough money left over.
There's not enough money.
And that's what the bank looks at. The SBA looks at, the lender looks at. Is there enough to pay the debt? They call that debt service.
Debt coverage ratio.
Debt coverage service ratio, debt service coverage ratio, DSCR, sorry. And that usually needs to be like 1.2, 1.25, right? And there needs to be enough left over for the owner, the new buyer,
to make money.
Yeah, it's got to have a livable wage, as they call it. So.
Yeah, and the SBA is so concerned about people getting in the business that not only do they loan you the business for the business, but there's also
some
usually
working capital
included as well, because they want to make sure that people are not running out of money in
right away, right up front. Yes, that's correct. Yeah.
So there's listen, it's a tough. I talked to my friends who were on the Fed board, and they roll. Miami rolls up to Atlanta, and then Atlanta rolls up to the whole. They have the meetings, and they have recommendations of whether or not to go up or down, and it is nonpartisan supposedly, and they're doing good work, but it's a singular tool. It's as they say, sometimes it's a blunt instrument that they're using for the economy.
Right.
And I would just say out there to the world and to all my Fed friends, err with, be cautious.
Right. Yeah.
And I think they are.
Error on the side of caution. Yeah.
Yeah.
Be careful what happens, because it does impact Main Street. It is interesting that when the SBA does the loan, let's say the loan is at 7, let's say interest rate's at 6, and then you add 2.5 on top of it. So 8.5 is the loan, right? But in 2 years, if that rate goes down a point or 2, the SBA will allow that borrower to refinance that.
Correct.
As long as the term becomes more favorable for the buyer, the SBA will let that happen.
Right.
So in that respect, if it is 5 or 6 and then it comes down to 4, we're still good.
Right.
Because that buyer or seller, and that's still a manageable rate for most people to be able to swallow.
Right. And what you've seen some people do is they have a fixed rate to begin with, and then it's a 5-year, it comes into a 5-year variable. But the problem is when the interest rates go up and all of a sudden there's a variable loan.
Yes.
Which could also be
That's true.
disastrous.
We just had a guy that's under contract now, and he shopped at one bank and the loan was 11%. And then another bank came in at 8.25 for the first 5 years, with the adjustable, which looks very attractive up front.
Yeah, sure. As long as
but it's a long-term gamble. What's going to happen in year 6?
5 years.
I don't know. Is the rate going to be the same? Is it going to go up? Going to go down? And if you're in now at 8.25 and then it becomes 11.5, that's going to have a negative impact on the cash flow like you were talking about before.
Yeah.
So,
and that's why all you entrepreneurs out there that borrow money from the SBA, oftentimes there's maybe a 2-year prepayment penalty.
Yes.
Not always.
Yeah, that's right.
But once you can start paying that down and you're at 8%, you might want to use some extra money to pay that down, because, everything in business is about trying to hedge
for the future too.
For the future.
Yeah, for sure. Yeah. Absolutely. Yeah. So for those of you interested in the interest of interest rates, there's some good nuggets right there for you on the deal board.
Yes.
So, yeah. Any closing remarks?
It's still a great time to borrow money. I mean, like you said, even at 10%, and you can get much better than 10% right now. You get, like you just said, 8.25. That's good money. 10-year money, as we just kind of did a quick back of the napkin, 10 years on $500,000 is $50,000 a year. You're buying a business that's making a couple $100,000. including the interest rate, maybe $60,000 a year, you still got almost $180,000 left over.
Right.
That's still a good deal.
Right. And in that case, how much, if I'm buying that business, how much do I have to bring to the table as the buyer?
Sometimes 5 to 10%.
5 to 10%. Yes.
That's a really good deal. It is a great time to buy a business. And we know that because there's thousands of buyers out there.
That's right.
So to all the sellers out there, with interest rates being reasonable, the stock market being somewhat predictable over the last 5 years of steadily increasing and not having these wild swings. And there are other instruments out there that you can more safely invest in than stocks. It's a good time to cash out.
It is a good time. And I think also, Andy, as a seller, thinking about not only can the borrower come in with 5 or 10% down, typically 10%, right?
Right.
Get a good balance of the portion financed by that lender through the SBA guarantee, but then come to you as the seller and say, hey, we want you to do seller financing for a small piece, 5 or 10% as well. And a lot of times the sellers are like, oh, I don't know if I want to do that. Why do I want to be the bank? Well, they want a little bit of skin in the game. You're going to transition this thing correctly, maybe stick around for a certain period of time. But remember, you can also earn interest.
Yes.
You just can't earn any more than the SBA earns, but if the SBA is earning 8, you can earn 8. That's perfectly fine. So you can make a little bit more money on it.
It's a good time to sell your business. We've seen it. We know that SBA loans and lending in general can go away.
Yep. Yes.
Interest rates can go up and down.
Right.
And right now they're on the way down. So it's a good time to be in the market. It just really is.
And think about, you're fortunate if you are a business owner, seller, buyer here in the U.S. because other countries don't have this.
They don't have this.
And so seller financing is very prominent in those other countries. And so that in the case may be that the buyer has to bring 50%. You're going to be the bank for 5 or 10 years at 50% of the balance.
Which historically we did.
Yeah, absolutely.
And
had to do it.
And because, back in the day, the SBA was certainly not as prominent and prolific, and the banks didn't understand the game, and it was only the money store.
Right. Remember him?
Phil Rizzuto.
And the money store.
Yes, so we were doing a lot of loans through the money store, and then GE Capital came in, and it was a slow beginning to the SBA program. Again, it's a great program. The money, you can leverage yourself into a business these days. Books and records are better than ever. We could do a whole show
on that,
just on why books and records are better than ever, but they are better than ever. So you can get a loan, and we've seen these loan programs, banks be very aggressive in looking at these businesses, looking beyond some of the ups and downs of some of these businesses and getting these loans done.
Well, it's interesting as we wrap this up, we were thinking about, in COVID years, which is now 5 years ago, and we're not really even impacted by what happened in 2020 anymore. But coming out of COVID, that was a big concern. They were looking at the 3 years of financials, let's say, kind of going, okay, let's push 2020 aside, go back to 2019 and 18. What was it like? Are you back to pre-COVID numbers? Where our offices are up in the Carolinas, we had Helene last year, 13 months ago now, okay? And that had an impact from October, November through January, February, March of this year. People's revenues weren't the same. And so their concern is, I'm going to take these books and records and put them in front of a bank. Is the bank going to go, well, what happened? Well, Helene happened.
The restaurants are down.
Absolutely. Some of them were closed for 90 days, 120
But the tree
days.
Service and the auto body shops.
Those are up, yes. All of the restoration and repair, the mold remediation, those are all up. So you have to take that into consideration too as you look at it. Yeah.
So,
yeah.
All right.
Interesting in interest rates.
And we also, of course, always have
a deal of the week
and a listing of the week. So
stay tuned for what's next.
Yes, absolutely.
Hey, Andy, do you know what time it is?
What time?
It's time for Deal of the Week.
Ring the bell. Hey, welcome back, everybody. It is Deal of the Week, and I am so happy to have here in Fort Lauderdale studios, Bob and Caroline Kelliher from Transworld Business Advisors of Central Washington.
Central and Western Washington.
And Western Washington.
We've expanded.
They've expanded, absolutely. And they're doing a fantastic job out there on the West Coast and representing us since 2019. We were just talking about that, so it's been a while. So Tell us about the deal that you just did. It was in the HVAC space?
Correct. It was a plumbing HVAC company. I love plumbing and HVAC. I do really well on getting those closed, but this one had some of its challenges. It started off with a postcard, of all things.
There you go.
Showed up for the meeting, met the husband and wife. They had an office above the actual warehouse where they brought the vehicles in, and the meeting went great. And they said, yes, we're going to go ahead and list with you. And so we went over the marketing agreement. They said, give us a day, we'll get it signed and get back to you. And then days turns into weeks, and then weeks turned into months. And then there was excuses, like, well, there's an employee that's out ill, and I need to wait until they're healed, and always an excuse. And then finally, I almost got to the point where I gave up. I checked in almost once a month, and I think it was about almost a year later, I get a call from the seller, and he's like, I want to list it, and I want to go now. I'm like, oh, okay. So went over there, met with him again, got the marketing agreement signed. His wife wasn't there, got the financials so I could do the valuation, and then got that all done. And he is super motivated. And I'm like, this is great, because when you have a motivated seller, obviously you have an opportunity to sell a business. So then he kept saying, let's go, let's get it listed. And Caroline, she does a lot of our marketing, as well as putting together that SIM. That's about 30, 40 pages about all the information about the business, right, to help sell it. And pushing her to get that done. Let's go to market. And then all of a sudden, he disappeared again.
Oh, no.
Yeah. And I'm like, what's going on? And then I keep trying to reach him, and there's nothing. And then all of a sudden, like a couple of weeks go by, and I get a call from his wife. And she said, I didn't even know he listed the business with you. He didn't tell me.
Oh, boy.
But we do want to sell. I'm like, is he okay? He goes, well, unfortunately, he's been incarcerated.
Ooh.
And I'm like, oh, boy. And he holds the license. So now we're in a sort of a panic mode. And I'm like, okay, well, let's get the power of attorney. So just to make sure everything's okay and everything. I mean, not the power of attorney, but just make sure that, try to figure out, can he hold a license while he's in jail? And I think we found out it was a gray area, and it was pretty risky. So we went to market, and we found a lot of buyers. We priced it to sell because we needed a quick sell. And we got 6 offers, probably within the first 30 days.
Wow.
It was wonderful. And then we met with all of them. They got together. The seller, the wife, chose the one that felt most comfortable with. And we haven't disclosed where the husband is yet. So we figured we'd do that in due diligence. Let's just see if we can agree to terms, go into due diligence. And then, so got into due diligence, and then they found out they were okay with it. We had 3 employees that 2 of them had the hours to take the test. One of the employees says, I've already studied, I can pass it, no problem. The other one said, I haven't studied for it, but I've been doing this for such a long time, I know I can pass. And so we made it contingent on one of those employees passing their test. And they took the test, and they both failed.
Oh, boy.
So the art here was to try to keep buyer and seller together, and it's going to take more time than we thought, extend the closing date. And then they took the test again. They both failed again.
Oh, my God.
So now we've gone a month past closing, 2 months past closing. We found out one of them only missed it by one point. I mean, one question. So I said, okay, so we're now 3 months in, taking the test again. He says, I got this. And they changed the test questions. So they both failed. And then the buyer at this point was like, I'm out. I'm out. I goes, let me help find you an 01 licensed plumber. Let's put an ad out. Let's hire one. And so we did that. We found an 01. The buyer interviewed this person, and it went great. And then the buyer took this person and his wife out to dinner, because they have to rely on this person.
Yeah.
And that dinner went extremely well. And so he says, all right, I'm going to hire him and we're going to go ahead and move forward. So, I mean, the growth potential on this business is wonderful because if you got these 2 licensed or ready to be licensed plumbers and a third one that's almost there in ours, once they do get their license, the payroll will go up because they got to get paid more. But then again, the scalability of the business is going to be huge.
They could go out on separate jobs now too.
And we can bring on more apprentices. And so it was just constantly keeping the buyer motivated and excited about the growth opportunity and having them just hang in there. This will happen. Mm-hmm. It's just a matter of when. And then the poor wife she's thinking that it's never going to sell. And, the emotions that she was going through was a lot. And so just keeping everybody together was challenging.
Right.
But
was it an SBA deal?
No, it was cash and seller financing.
All right. Wow.
Yeah.
Sounds like a good deal, and you got it done. Everybody's happy?
Everybody's happy.
All right,
good. Oh, my goodness. So.
All right. Well, what's the best way to get in touch with you guys if somebody else wants to sell a business?
I can handle all the challenging ones, so no problem there. So, yeah, Bob and Caroline Kelliher, we're in Central and Western Washington State. You can look us up online. You call me direct, 425-531-0042. That's her. Or 509-558-7150 for me.
There you go.
Yeah, I call her more.
Yeah, call Caroline. She's the one in charge, right? So thank you. Thank you both for coming in. Thanks for this. Great story.
Awesome. Thank you, Andy.
Hey, JT, do you know what time it is?
Money time?
Almost. It's time for Listing of the Week.
Hey, welcome back, everybody. And I have our partner in New York, Sam Curcio from Transworld Business Advisors of New York, New York. And Sam has been doing a great job. You've seen him here on the deal board before, doing his own listings of the week, but he's live with me, and we're all together here in Orlando. Sam, you got a really nice business you want to talk about today.
Oh, definitely. And thanks so much for having me, Andy. It's good to see you. Good to be here at the conference. We have a great manufacturing business in Brooklyn.
Nice.
It's a light manufacturer, been around for over 20 years. Sellers looking to retire. Great Fortune 5,000 clients that he gets to work with. They're doing over $6.5 million in revenue, 1.7 in SDE. It's been rocky the last few years, but he did a bit of a restructuring in his company in 2023 and 2024. And so he's coming out the gate strong. We've already got a ton of interest. This is going to get sold fast.
Nice. All right. Well, Sam, what's the best way to get in touch with you?
If you want to learn more, you can reach me at scurcio@tworld.com.
There you go. Thanks, Sam.
Thanks,
Appreciate
Andy.
it.
Thanks for tuning in to the show today. If you like the podcast, share it with your friends on social media. And don't forget to subscribe and leave us a review on your favorite podcasting app. If you have questions, would like to appear, or have suggestions for topics for the show, get in contact with us through our website, thedealboardpodcast.com.